Good morning, everyone. So the federal budget came out a couple days ago, and I think it's time to start talking about some of these things because, well, we're getting phone calls, and quite honestly, hopefully this stops a little bit of the false Facebook frenzy that's going on about it right now. So the first one I want to talk about is, by the way, Facebook is not a place to get your information, unless, of course, you're watching my videos. Okay, professionals. If you're getting your information on Facebook from professionals, please do that. It's a good source. If you are listening to your neighbors, friends, people that aren't in the field, that really don't know what they're talking about, please don't put too much value into those. Okay, so first one I want to talk about is the new capital gains inclusion rate. Okay, so it's going up to 2/3, so 66.67% as of June 1st, and that is only on capital gains over and above $250,000 per year. So if you're one of those people, one of those rich people that are in the, I believe, 0.3% of Canadians that would have income, something like that, this is going to affect you. And not a lot of people are going to feel bad for you either. I mean, good for you. Making lots of money, you've done well, excellent. But so these rules suck for you, but for the vast majority, 99.7% or whatever they reported this morning, was not going to affect Canadians in general. Okay, but if you have a corporation, this applies to all of your capital gains, and that $250,000 exemption does not apply. Okay, so any capital gains that you're going to make in your corporation is going to be taxed effectively 50% higher than what capital gains were taxed on prior to these new rules coming into place. Okay, so before, let's say, the average capital gain tax was about 20% of half of whatever your gain was. This is Alberta, okay? And this is after paying the dividends that you need to pay and all that kind of stuff. But the effective rate is about 20%. So now the effective rate is going to be closer to about 30 on that same amount of money. So if you have a corporation that's got a lot of capital gains, a lot of investments sitting in an account somewhere, and you want to make sure that you're going to capture the most amount of benefit out of those investments, you need to make sure that you are selling those investments prior to June. Okay, so we're going to be reaching out to a few of our clients that have investments like that to see if they're interested in selling, or if they have some other reason to hold on to those investments. So for the vast majority of you, this new rule, this new capital gains inclusion rate, which, by the way, is not the highest it's ever been. It used to be 75%. I want to say that was before my time, late 90s maybe. But anyways, it's not as bad as it seems, and it really is only going after the ultra rich. Okay, so I hope that helps. Take care of yourself, take care of your family, take care of your friends, and stop listening to the false information online. Hope that helps. Take care. Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.